Okay, we've got Ruchit, Jain and Hemant with us. We've got Hiral also still waiting to run us through some stocks and news, and Ashu with lots of stocks on the chart. So let's get started. I'm going to just get a quick check on levels from both Ruchit and Hemant. Hemant, first, just market direction, index, how's it looking to you?
Hey, good morning. I think it's now entered in a zone of support. 83, 83.30, it was struggling, market was getting overheated. I think now it's gone into the area where put writers have the maximum hold on. So I think 8050 should hold for the time being. I don't see it giving away this level very easily unless until there's something more to come from the global markets. And if I am a trader, I would actually go long if Nifty approaches around 8080, 8070 with a stop loss of 8050. But now I see that till this Brexit event is over, I don't see Nifty crossing 82, 82.10 in a hurry. So basically, I think now you will see more consolidation happening between the 8030, 8050 mark on the downside and 82 on the upside. So if there is for any reason the Nifty moves up towards 81, 80, 82, I think there also you can go short with a stop loss of 82.30 and you will retrace back to 8050. So it will be in a trading consolidation mode. But definitely it will be, the range is 8050 to 82 currently.
Okay, Ruchit, your view?
Hi, good morning. Overall, we have seen that markets have already corrected from its resistance zone of 8300. Now, what has been observed that in yesterday's trading session, we had a good gap down opening and that gap is still open. So, according to gap theory, if that gap is not filled and the markets continue to go down, then definitely that gap area would become a resistance zone now. So, according to that, 8150, 8160 is a resistance zone. Now, today's trading session would be quite important to see whether markets are able to cross that 8150, 8160 or not. In case if markets continuously go below yesterday's low of 8060, then 8060, then there is probability of this correction to get deeper up to 8000. Now the broader trend of the market, having said that, still remains positive. There is formation of higher top, higher bottom. So in case if any correction comes and market comes to the lower end of the range, then around 8000 we believe there is a major support area which was the earlier resistance zone. So I think it's a buy on dips market. One should see whether yesterday's gap is filled or not. In case if it is not filled, then this correction should get deeper up to 8000 and one should initiate buying positions around 8000 levels.
Good morning, Ruchit. We'll leave the market on the side till the time it decides what it wants to do. But I got tons of stocks that absolutely are not concerned. Sri Renuka, Ugar, Upper Ganges, Simbauli, Out Sugar, Uttam Sugar. I can continue. Please tell us where sugar is going.
Yeah, good morning, Ashu. Overall, this sugar space has been in a positive zone. Even the last 2-3 weeks, we have been talking about this space that continuously, even after rally of last 6 months, the volumes have been increasing even at current levels. So delivery-based buying has been seen even after this already up move, which has been seen in last 5 to 6 months. So I think one should not one should not become any bearish or find any kind of top out formation in these stocks. The rally is likely to continue going ahead. I think good upside could be seen in couple of stocks such as Dhampur Sugar and Balrampur Chini. These are the two stocks on which we have been quite bullish since last few days. We have also recommended aggressively to our clients at lower levels in both these stocks. So I think there's still a good opportunity, still a good upside could be seen in the sugar stocks. Balrampur Chini and Dhampur Sugars could be the two stocks which could outperform the rest of the pack.
Okay, let me bring Hiral in quickly on some of the other stocks and news that we're tracking as well. Hiral, what's on our radar today?
So we have a TCS that will be in focus as reports suggesting that they've reported a sharp rise in the contingent liabilities, and this is mainly on the back of a higher tax demand. Now the figure is more than double to 8,148 crores at the end of FY16, and this does include a 6,227 crore claim by Epic Systems as well. Now the proxy advisory firm SCS has said that this kind of a high number is, a pretty unusual one. It's way higher to what even Infosys has reported, where we've seen a number of close to 180 crores. So they are looking at questioning TCS on this, so that counter will be in focus. Gujarat Gas as well, where they've got PNGRB okay for exclusive gas supply to Dahej as well as Vagra, and additionally earlier they did get an okay for Amreli as well. So we can see an uptick in terms of where volumes are concerned for Gujarat Gas. Delta Corp, they've got a permission from Goa to operate the vessel, and they will be looking at operating their MV Royale float, that's Delton Caravella in the Mandovi River. So again, the casino business should be up and operational for Delta Corp. Deepak Fertilizers, where the government has released a subsidiary of close to 485 crores. They had a due of close to little over 700 crores. 311 crores is still pending for them, so that counter will be in focus. Havells India is looking to acquire up to 70% stake in Promtech Renewable Energy Solutions. So the amount has not been disclosed, so that counter will be in focus. Coal India, as well as they've offered close to 2.8 million tons of coal via e-auction. The e-auction will be ending tomorrow, and as of Monday end, the company has received bids for close to 1.6 million ton, which is 57% of the total volumes that was on offer. So some reaction expected there. And Tata Sponge Iron also will be on focus on the same news. We have DLF as well, where reports are suggesting that the rental arm has got $1 billion bids from biggies. It's GIC, Blackstone, as well as Brookfield, who are among the suitors who have filed for offers for 40% stake, and this will help them refinance and cut debt to the tune of 22,000 crores. And additionally, they are planning to offload a significant minority stake in DLF Cyber City as well. And lastly, we have Goldman Sachs on Cummins, where they've downgraded the stock to a neutral from a buy, and they've reduced the target price to 814 from a 980. So some bit of a negative reaction can be expected on Cummins India as well in today's session, Abha.
Just one point that I wanted to make on the PSU banks. They'll need to be revalued because, to me, this RBI move seems to show that there is actually no conviction to clean out the balance sheets. I don't know about the government, but the RBI certainly surprised me because if they wanted to clean out the balance sheets, they need to do what the Americans call bite the bullet, which is go to the High Court, file a winding up petition, which you can do even if you have a 1 lakh loan with somebody, and tell the guys, you don't pay up. Why are they turning it into equity? Because if they filed a winding up petitions, they can take over entire companies. To me, this seems like after you don't pay the loans, no problem. We will give you even a longer rope. Continue to float in the sea. But you as a shareholder, please don't float in the sea. This actually is a very bad move for PSU banks. I'm surprised that they didn't file winding up petitions and are doing stuff like this, which it just doesn't bode well, either for the PSU banks or for the companies, if you have these kinds of companies where they've given them this long rope.
Ashu, one more thing, but over here, if you go to see the PSU bank managements, they are pretty positive about the steps that RBI has taken. But actually, if you go to see, is this a positive for the companies which are stressed or for the banks? That's a question to be asked, because with this kind of a move, all the stressed sectors, you talk about the textile, you talk about the infra space, cement space, I think they will be majorly relieved out of this because they don't have to sit with a headache, okay, we have to pay out money. No, we have to give out equity and we are stress free now. So,
yeah, although several of those promoters won't be happy to give up control either.
Now, my only thought, Abha, was PSU bank money is not money which is like HDFC Bank's money. It's my money, it's my taxpayers' money. Well, why don't you take it over? I mean, why you want to give the rich guy even more money? And that's a concept that I just fail to understand, why they don't file winding up petitions.
Okay, this is a debate that could go on for quite some time. So, in fact, let's get a take on some of those stocks and news and some of the banks as well. First, I just want to run through some of, Ruchit, I noticed you have some strategies, so let me first just get your strategies going.
Yeah, since I just mentioned that it's a higher top, higher bottom market and decline should be used as a buying opportunity. So recently we have seen some of the stocks in defense sector doing quite well. And BEL, Bharat Electronics, is one of the stocks which had given a breakout from a symmetrical triangular pattern. So I think last 2-3 trading sessions along with the market, along with the other mid-cap stocks, the stock has shown some correction. Now this correction should be used as a buying opportunity. The stock has already given signs of resumption of the larger degree uptrend. So with the stop loss below 1175, we are expecting the stock to go up to 1350 in next 1 to 1.5 months. So it's a good buying opportunity in BEL on every dips. And my second buy call is a buy call in Reliance Capital, trading pick wherein we have seen that the prices have now corrected up to its multiple support zones. The stock since last 7-8 months, in spite of markets going up or down, has been forming higher top, higher bottom and is moved in a rising channel. Prices are now currently trading near the support end of the channel. Other trend following indicators such as Super Trend and PSAR are also indicating good support at current levels. So around 390 one should go long on Reliance Capital from 8 to 10 days of trading perspective, and then keep stop loss below 376 for target of 414.
Okay, let's take a very quick break. We've got lots of stocks to run through with both Hemant and Ruchit. We'll also have Mohit Kaba and Gaurang Shah joining us after this break. Stay tuned. Back in a moment.
You're with us on Street Smart. Ava's been kind enough to say, Ashu, you start. Because I'm going to bother her with a couple of LinkedIn questions in a moment, of course. Yeah, Hemant's with us. So I wanted to check on the PSU banks. Good morning, Hemant. You may have had a chance to hear on some of the conversations, but looks like they're not ready to bite the bullet. I mean, just from a trading perspective, what happens to these guys now? I mean, what does it look like for PSU banks on the charts or on the futures and options side?
See, it's a difficult call. I could hear what you are saying, Ashu. I don't know what is the right method or wrong. But from the trading perspective, I think I would, among the PSU banks, I would only like to take a bet on the large cap ones. Something like an SBI or a Bank of Baroda. SBI especially because the base has shifted up. When I say base, that means the put writers have now comfortably sitting at 190. So I think any dip towards 195, that's a very good opportunity to buy in for a target of 205 to 208. So from trading perspective, I think another 2 to 3% correction and then SBI becomes a good buy. And rest, the smaller PSU banks, I really want to don't take any bet on them. So it's better to avoid them because they only move when there is short covering happening. So better is to take bet on the leader itself. So among the PSU banks, I would only prefer SBI right now.
Mohit Kaba is also joining us this morning. Mohit, a quick look at some of the stocks on your radar as we head into opening today.
Well, a few stocks that I like are in the mid-cap area. KRBL is looking good in the charts. It's seen a good up move yesterday. Next levels to watch out for would be levels of 295 to 300. That's a buy with a stop loss at 280. Also, what I like is Escorts. It's seen a good up move yesterday and can continue to move higher. Levels of 190 next on Escorts. It's a buy with a stop loss at 176.
With a couple of stocks I wanted to take, if you've looked at any of them. First, I'll just bring up this Tokyo Plast. You have this Tokyo Plast. I'll take the smaller ones first. Then let's put up this Kaser Enterprises. Some of them don't have enough volume, but look, if they're running up, I'll just show it to them. And then you have Kiri Industries. This has started a move again. I'll put all the three charts so you can see it for yourself. You can see Tokyo Plast chart is pretty much on a ascent, and this one also similar. Now, a couple of stocks where the charts aren't clean, but they're running up. So a lot of these tea stocks, the charts are not clean at all. But so Williamson, Jayashree, Rossell Tea, ROSSELL, and also Tata Coffee. Maybe they're trying to make a breakout in Jayashree Tea. It looks like it's broken out, but you know, they're low volume stocks. So your thoughts? I've also Tata Global. Is that what they call Tata Coffee? Okay, fine. So that's Tata. So can we look at it again? Because there was some frost in Brazil. Now I'm pretty sure the guys who drink coffee don't start substituting Indian coffee for Brazilian coffee. But it doesn't matter. Doesn't matter. The chart says that's the way it is. This one looks beautiful. It's really moving up. So we'll talk about a number of these guys and one Bombay Rayon. So if you've looked at Gati, Coromandel, Williamson, Jayashree, Tata Coffee, Rossell, Bombay Rayon.
Well, I've looked at a few of them. Gati is looking good, but it's already moved up from levels of 120 to 170. To get in now perhaps may not be the best time to, since it's got some kind of supply zones around 170 to 180 zones. So I'd want to back off on Gati. As far as Tokyo Plast, we were saying it's seen a good up move. It's on upper circuit, so we should open higher today and move towards levels of 78 to 80. Also, what's looking good on the charts, we spoke about Kaser. That's also looking fine, trading at all-time 52-week highs. We could see levels of 60 next on that.
Tata Coffee, just just before we...
Tata Coffee is looking good. It was a buy call yesterday and it's seen a really good up move. We're about to break out of the levels of 103, 104, which are the all-time supply zones. And once we get past that, 120, 125 should be on the cards for Tata Coffee. The whole sector is doing well, even McLeod Russell.
Okay, we're just scanning down to pre-open now on your screens as well. Keep an eye out on TCS as well, as Hero also just mentioned. talking about liabilities that have almost doubled due to tax demands. It's just interesting in the context of the fact that we had some amount of negative commentary last week from an Infosys as well. So just in terms of how the market may read that, but otherwise, we've pretty much got a whole host of mid caps that continue to be in the news. Havells, fertilizers, some of the names there that we'll be tracking for you today. A couple of the mid cap infra names as well. But let's just pull up for you those opening quotes. And on your screens right now, we've got a bit of an uptick. Well, 81.76, but it's cooling off slightly. So let's just see. And markets have been choppy. I mean, even yesterday we had a huge gap down and a bit of a dip, a big intraday dip actually, before we recovered. So today it's looking all right for now, Ashu, but I'm not quite sure whether to take any heed of it.
So we'll have to watch for the levels. What I'll say though is that the underlying belly of the market's pretty strong. So stick to the sectors, you'll be fine. Maybe sugar, tea, coffee, logistics, where the real moves are coming. On the index itself, this market surprises you on the upside. So I'd say that's the upside I'm looking for. And yesterday, the way it recovered towards closing was a pretty good indicator given the global situation. And as we've been talking, I think if we can get over the colonial hangover of Brexit, we should be fine. We have nothing to do with it.
All right, we've got Gaurang Shah also joining us this morning. Gaurang, good morning. Let me just take off from where Ashu left. Are all these global fears fairly overdone when it comes to our markets currently?
Morning, Abha. Well, I hope that there is no huge fear coming out of the Brexit, because that's one particular global event which is actually, concerning me a little bit. On the US Fed meet, well, the verdict is clearly out there. On fallback of the disappointing data that we've seen from the US, I don't think that you're going to see any daring move by the Fed chief to move the rates up. So that story is done and dusted. But up until now and 23rd, I think there's going to be choppiness and volatility, and that's not only going to reflect in the equity market but also in the currency market. And the reason why I'm saying that, Abha, is because the opinion or the view is divided right in between, and the split is wide open. The referendum can swing any way. That's the concern. And if that is the concern, then I think till the time that event is done and dusted, we are going to see volatility and choppiness. And the up move, if any, I think it's going to be extremely restricted, whether it is our market or any other global market. But within this volatile times, from a long-term point of view, I think you should identify pockets and stocks wherein you can definitely get invested from a long-term point of view.
All right, fair enough. We were also taking a look at some of those PSU banks, Gaurang, this morning on further attempts by the RBI to give them opportunities to manage those NPAs, and talking about how they'll have the option to convert some element to equity and so forth. What do you think when you hear some of these developments? Does it reassure you at all? Would you still completely stay away from some of these names?
Well, reassurance will come later on, Abha, because it's going to take a while and it is work in progress. Now, let's face it, we saw in the last quarter gone by, fourth quarter, and we saw in the earlier quarter, that is the third quarter. So, the third and the fourth quarter were extremely, extremely painful for the PSU banking lot. And the fact is, Abha, that these problems are not 3 months, 6 months, 1 year old. These problems, as far as the GNPL and the provisioning is concerned, has been on the balance sheet for the last many, many years. And now that the policies have changed and the RBI is coming down heavily in terms of recovery and provisioning and changing the rule of the game, my guess is that the case for improvement is definitely there. How soon or how early we can see those signs of revival? Well, it's going to take a while. And with these changes that we heard last evening, I think it is only prudent to do that, because banks were finding it extremely difficult to sort out the problems on the balance sheet in one go or in a short span of time. Hence, my belief is that these changes have been put in place, and I also believe that with these changes, I think, though it might be a little bit a longer period of medical treatment, but my sense is that definitely post the treatment, the health of the balance sheet of some of the PSU or most of the PSU banks is definitely going to look quite good. And so with a disclosure, I would say that we have coverage on State Bank of India, Union Bank of India, Bank of Baroda, to name a few, in the public sector banking, that is PSU banking universe.
Right. Hemant, if I may just request you for your if we can just go beyond today and yesterday, in the overall scenario, Hemant, what do the put and call positions indicate to you? And if you've happened to look at how the bank Nifty is moving, also beyond the data, just from your experience, what do you think is the next move in the bank Nifty and just the Nifty itself?
See, Ashu, I'll put it this way, that definitely the first thing is that Indian markets range has shifted up. So the broader charts or whatever we check, the medium term charts, things have changed. So if you ignore 1 or 2 days here and there, I don't think unless until we go below 7950, which was the earlier top which was acting as a resistance, the trend changes. And that is why I think 8,000 put writers are still standing on their positions with 76 lakh shares as OI. So I still feel overall the trend is positive. As Ruchit was also mentioning, at dips you should buy this market out. Yes, till Brexit you will see volatility happening. That is part, of course, because US CBOE VIX has also jumped up above 20. So I am expecting volatile moves to happen till this event goes by. But overall, if you see, the market sentiments are still positive, and you will see a lot of buying coming in, because I still feel there's a lot of left out feeling still in the market open. So I think moment Nifty tries to come to that 8050 or 8,000 levels, you will see buying coming in. But the more you go away from 8300, the more time it will take to cross 8300. So still it's a buy on dips market, but fresh rally will only start once you cross 83 on the upside. Coming to Bank Nifty, I still feel Bank Nifty is showing more strength than Nifty just because of the weightage. HDFC Bank, Axis Bank, Kotak Bank, Yes Bank, their charts are much more stronger than the PSU banks, and Bank Nifty doesn't need PSU banks actually. Private banks have enough weightage to take Bank Nifty up. So I feel that every time Bank Nifty will go to 17,350, you will see a lot of buying coming in, and it will try and test every time that 17,800 to 18,000 mark. So I still feel Bank Nifty is a safer, or I would say much stronger bet than Nifty right now. But both of them are looking like buy on dips. It's just that the market is showing volatility because of an event. So I think any corrections of 100 points in Nifty, it's a good area to get into the markets again.
So I want to just take a little bit of time to talk about a space in the market which has been absolutely spectacular. So I'll start out with Upper Ganges. Can you put up the chart? Let's start with 3-month and 1-year charts. We don't really need the immediate term charts, because you will see how spectacular that at 319% in 3 months. Can you just bring up a 1-year chart? And I'll tell you why I'm showing this, because usually what happens is, all of us are psychologically bogged down by what we call the anchor effect. If something goes up 50%, no, it's not going to go up anymore because it's gone up 50%. It goes up 100%, oh, it's going to collapse tomorrow for sure. It's gone up 100%. But it doesn't work that way, because if you're a trader, you let the profits run. You'll get out of the 9 stocks where you're making a loss, but let the profits run. When you do that, you make a ton of money. So let's look at Ugar. So till the time it collapses, it doesn't collapse. That's it. That's the way it is. Ugar Sugar. Then can we bring up Simbauli Sugar? Also, you can just keep giving you the 1-year chart. Sri Renukar Sugar. This started late, but yesterday even that one was up 16%. So then Oudh Sugar, OUDH. So 469. I mean, it's nothing short of spectacular. There's the stock for you, Uttam Sugar. But I mean, I can just go on with the list. The space in this market that's absolutely got stellar charts is sugar. And till the time the rally doesn't die, well, I mean, traders trade on the uptick. I mean, that's the rule. And you will only make money in one stock as long as you are prepared to get out of 9 stocks if they give you a downtick. That's the way to make money. But anyway, Mohit, your thoughts on sugar stocks, and where are strongest, specifically on time, price, volume momentum?
So you've seen a really good up move on most of these sugar stocks. I think the only ones that haven't moved like the rest are maybe Bajaj and Hindustan, so those should be avoided because they're the laggards in the sector. There could be some kind of catch up, but I'd stick with the stronger charts. Also, from the point of view of the trend being so strong, one can enter but just have a 5 to 7% kind of stop loss and trade the upside. That's the best way to trade this counter because you're seeing really large up moves in Out sugar, Upper Ganges sugar, Ugar sugar, even Mavana sugar for that matter. So you're seeing really good charts in all these four, and they can continue to move higher in the coming days. How much higher, it's difficult for anyone to say. So the best way to trade it is have trailing stop losses of between 5 and 7% and continue trading on the upside. As soon as they move higher, keep moving your stop losses higher as well and ride the upside.
All right, let's just take a look at those pre-open quotes. It's actually looking decent, 0.3%, holding forward at 81.34 currently. We've got on the move today ICICI, BOB, SBI, so banks in action, Axis Bank. We've also got a bit of a move on Bharti Infratel. That's been holding out actually. BPCL has also been holding out 0.7% there. Tata Steel, Tata Motors, and a couple of those pharma majors that haven't been moving, also just seeing about a 0.5% uptick there. All right, Hemant, from the commodity pack, I mean, anything you're tracking there, even in terms of just the kind of F&O data and how it's shaping up, because there's all kinds of commentary coming in, and we've seen, quite a big move on some of those stocks. Now wondering whether they're cooling off or not. What's your sense?
See, I will put it sector-wise. I think cement as a sector is showing very strong buying. Every lower levels, you see buying coming back, open interest adding up. Particularly, I like two stocks there. One is Ambuja Cement, which has saw yesterday also around 11% open interest additions. I think stock is now clearly heading towards that 245, 248 zone. One can keep a stop loss of 231 on the same. Second is India Cement. It's a mid-cap stock, but it's showing now strength, and now the stock has managed to cross above that 95 limit. So I think if you can keep a stop loss of 95, the stock is heading towards 108. And what Mohit also mentioned, I'll just second that. Among the commodity, your tea stocks are doing very good. Both the F&O stocks, Tata Global and McLeod Russell, are adding open interest with the price charts showing strength. Especially if you see Tata Global, I think the move has just started. This is a stock which doesn't move usually, but yesterday it's gone up with the backup of delivery volumes as well as open interest. And I think one can keep a stop loss of 123. I see a target of 132 coming in it. So cement and tea stocks, I think movement will continue for at least coming 2 to 3 trading sessions. So people can participate on the long side on these two sectors especially.
All right, Hemant, Ruchit, thanks for joining us this morning and taking us through some of your strategies. All right.